I'm Matt Bishar with REIT.com here in Boca Raton, Florida for REITWise 2014. Joining me is John Good, partner and co-head of the REIT group with Morrison Foerster. John, thanks so much for joining us.
Thanks, Matt. Nice to be here.
I'd like to start by talking about REITs spinning off portfolios of assets into separate companies. You know, we've seen it from a number of companies, Simon, ARCP, among others. What are your thoughts on these deals, and do you expect more?
Well, I think as people are getting into the post-recession recovery and really examining their portfolios of assets and looking at how their own stocks are trading, they're realizing that there may be some opportunities to create value for shareholders by focusing on particular types of properties, becoming, while REITs have for many years been single property types, they're becoming hyper single property types now, where anything that really doesn't fit either from a growth standpoint or from just a quality standpoint, they need to move out and have their portfolio focused in a way that drives better growth, better share value. If you look at the Simon deal, they took low growth, lower performing, more strip center type properties and separated those from their premier mall properties and their big marquee strip centers. ARC did sort of the same thing. They took shopping centers that were mixed in with a lot of single tenant, triple net lease properties and pulled those out. The end game being trying to drive multiple, trying to separate asset buckets so that they achieve the types of growth and types of returns that drive shareholder value.
Now, what do you see as the most pressing issue facing the industry as it relates to REITs and the SEC?
Well, with the SEC, not to be flippant about it, but right now the REIT group at the SEC is undergoing some transition. So we'd love to see who the permanent staff will be there, although they seem to be getting close there, and we've had deals going since the prior head of that team left, and they've been very good discussions, and they've done a very good job reviewing registration statements and dealing with issues. In terms of substantive type issues, there's been an ongoing dialogue about financial metrics that end up in filings, non-GAAP measures, things of that nature. And there's been give and take between the staff and the securities bar as to what's appropriate to be in public filings. And I think that continues to be an issue as metrics change, as analysts start to slice and dice information differently. The ability to pull that kind of information into filings is going to always be a pressing issue.
John, thank you so much for your insights.
Okay, good, thanks.
For more on this and other REIT news and analysis, be sure to visit REIT.com.